This is a tutorial on how to deploy liquidity in decentralized finance, specifically on Meteora. So Meteora, for the people that don't know, is one of the leading decentralized exchanges on Solana. Before we start, of course, the usual. This is obviously for educational purposes. This is not an endorsement for Meteora. This is just to show you one of the examples of how you can put your digital assets to work through liquidity provision on a decentralized exchange. Second, of course, if you're starting new, start with very small amounts until you get comfortable with the user interface, the user experience, so you also understand the ins and outs of everything related to liquidity provision, and especially also the risks, because this strategy definitely is not a passive strategy whatsoever. It requires you to understand what you're doing. It requires you to understand how liquidity provision functions, and it also requires you to be on top of market news, price direction, technical analysis, and understand where the price of the token you are supplying or the tokens you are supplying to a specific pool is basically heading. So you need to do a lot of research. You need to be present in order for you to be able to execute such transactions. They are definitely much more complex than staking, than lending and borrowing, or liquid staking, or even restaking for that matter. Let's dive right into our tutorial. So I am here on Meteora, app.meteora.ag. I have my wallet connected. So in case you don't know how to, you just click on connect. Phantom wallet, and in my case, I chose Phantom wallet. Then you can see all the available pools here, and you can also navigate to the pools tab. It shows you the DLMM, which is dynamic liquidity market making. Also, it's almost the same as concentrated liquidity if you want, where you can put your liquidity in a specific price range rather than just putting your liquidity across the full range, whereby you will have liquidity sitting at price ranges that will never be reached, at least in the short term, meaning you will have liquidity sitting idle, not doing anything, and not earning you any fee. So the fact that you can concentrate your liquidity means that you can put all your liquidity in a price range where the tokens are actually trading at, and this allows you to earn more fees. You can see all the pools that are available under this specific strategy, which is DLMM, of course. So we're going to be doing an example for Solana USDC pool. Here you can see the dashboard similar to Uniswap, the total value locked inside of that specific pool. This shows you how much liquidity that specific pool have. Then you have the volume, 24-hour volume. You can also change it to shorter time frames. This is especially important for people that are day traders. Then you have the 24-hour fee to total value locked. So right now, on a daily basis, you would be earning around 0.42% of the total liquidity you deploy into that specific pool. Of course, it's not exactly 0.42. It can fluctuate heavily, especially because you're just seeing the fee per TVL on a 24-hour basis, which is not long enough to have a solid number. But nevertheless, it is something to look at. So when you open this drop-down menu here, you can see the different sub pools, if you want, that are currently available under the Sol USDC pool. So here you can see the number of bin steps, the fee. I'm going to explain all of them, don't worry. The number of bin steps, the fee, the total value locked, volume, and fee to TVL. So the bin steps is the price range. When you have more bin steps, it means that the price range is bigger. When you have shorter bin steps, it means the price range where you can deploy liquidity is smaller. So for example, here, bin step 1, it is an extremely tight range. So do not expect the price to stay in that specific pool or sub pool for an extended period of time. It might stay there for a few hours, but after that, the price will definitely fluctuate and will go outside of the bin. You will no longer be able to catch fees. Then you have the fee tier. So the fee tier is the percentage that traders pay for every swap that they want to do, and they pay it for liquidity providers just like you and me. So what you need to do is to be looking at the volume versus the fee of every specific pool, and making a decision based on what makes sense. Let's take an example. If you look at the all four or the biggest four pools with the highest volume in the last 24 hours, what do we see? We see that you have here $35 million of volume for the first pool or sub pool, which constitutes 4 bin steps. So acceptable price range if you want, and the fee is 0.04. You also have 0.01 fee, but $20 million of total volume. So you want to aim for a very high volume and at the same time very high fee. So the higher the fee and the higher the volume, the more money you will make. So, and then you have here 0.02% as fee, and then $14 million in terms of liquidity. I wouldn't go for this one, for example, because it has almost half the liquidity of the 0.04 pool, or the pool that has 4 bins. And also the fee is half the first one. So definitely you're not going to be making as much fees as this pool here. And then you have 0.1%, but it has $13 million in terms of volume. So this one has a high fee, but it's not attracting a lot of volume because, as you know, when users swap on a specific decentralized exchange, that specific DEX routes the transactions based on the best execution route. So even that the fee here is high, it does not mean that it will attract a lot of volume, as it is pretty evident because the volume is almost 1/3 of the volume of a pool with much lower fee. So based looking at this, I think I'm gonna go with the first one. So I will click on that pool. And this is the interface where you can basically deploy your liquidity. Now, obviously, if you're looking at this for the first time, it might be a bit overwhelming, but comparing this with Uniswap, I would go for this every single day. It might look confusing for a bit, but once you use it a few times, it becomes easy to use. And the reason why I like it the most, it's because it shows you your liquidity in real time. So as the price starts moving, you can start seeing how your liquidity is changing and how your liquidity is being used. We're going to do an example and you will see that. You also have different strategies. You can change how much you can put liquidity, either one-sided or equal. So you have much more freedom to be able to change the settings to best fit your strategy. So let's walk through the main categories of this dashboard. So on the top left here, you have a dashboard that shows you the current price of the pools or the current price of the token. In this case, we are Solana USDC pool. So the price of Solana currently is sitting at $91.75. Total value locked is 4 million. This is how the liquidity is distributed. So you can clearly see that there is a lot of liquidity on Solana sitting at $92 and above, while there is barely any liquidity sitting below that price range. Here you have the 24-hour fees, 24-hour fees per total value lock, the total bin steps, the base fee of that pool, which is 0.04%, dynamic fee, total trading fee. You don't have to worry about that much. This is the total volume representation and token information. Next, you have a really nice dashboard here that shows you the chart, and it also shows you the bins where you'll be deploying your liquidity based on the settings that you put here. So if I change this to the upside, for example, I'm starting to concentrate my liquidity closer to the price range. So for our example, I'm gonna be first of all zooming out to the 5-minute chart. This is the 5-minute chart. Because of the sake of this example, of course, that's why I want to zoom out. So I'm zooming out to the 5-minute chart, and I'm going to concentrate my liquidity to exactly where the price is currently sitting. Let's keep it a little bit low. Let's keep it here to the bottom of that wick. And then on the top, the exact same thing can happen. I can reduce my liquidity to best fit that price range. So previously, when I mentioned the bin step, 4 bin steps, the 4 big bin steps usually cover a specific price range, let's say from 100 to 90. Any price range that goes above these two, you will no longer be able to deploy liquidity there. You're going to have to change pools. So that's why choosing a pool that has a big enough bin steps is definitely recommended, or the price range will easily fall outside of the bin steps. So to go back to our example, this is the liquidity that I want to deploy. This is the range. And this is the best thing about this app. So you have this chart that shows you exactly where you can deploy liquidity, which is not basically available in other decentralized exchanges. So, and then moving on to the right side or right panel. So this is where you can deploy your liquidity, choose how much you want to deploy liquidity. You can choose autofill, and then it automatically distribute your liquidity depending on how much tokens or how much assets you want to deploy in the liquidity pool. You can also turn this off and you can manually change. Let's say I'm gonna put 0.05. If I put autofill, you can see automatically it gave me another 50%. So right now my liquidity is split 50% Solana, 50% USDC. If I want to deploy one-sided liquidity, I turn this off. I remove my USDC, and you can clearly see that right now I'm only deploying liquidity to the upside. Meaning, if the price keeps on moving higher, my soul that is sitting in this liquidity pool will be exchanged for USDC. And as I said in the example of Uniswap, there's some traders, instead of going to decentralized exchanges and just simply exchanging swapping their tokens, they used liquidity pools in order for them to enter or exit a position. So in this example, you can come and deploy only Solana to the upside, because I expect, for example, Solana price to top at around $94. So I take all my SOL, and instead of selling them on an exchange, I take them and I deploy them in this bin, in this liquidity range here, from 91 to 94. As the price of Solana starts going higher, my tokens that are available in the tool will be swapped into USDC, effectively exiting my position. And at the same time, I will be making fees while I exit my position. So this is obviously not by accident. If you want to do this, you'll be doing this with purpose. You know that you want to exit your position, you know where to enter, where to exit, where to deploy all your liquidity, and you just deploy it. Once the price moves towards your price range, then you will automatically swap your tokens and exit your liquidity. And the opposite is also true. Let's say I want to buy a Solana because I expect that Solana will bottom between 90 and 91, and let's say $90, and I want to buy in this range because I expect the price of Solana in the future to keep going higher. So instead of going to a decentralized exchange and doing a normal swap, I can use my USDC and deploy all my USDC into this price range here. Let's say in this case, I deploy my liquidity at $90 to $91. Yeah, that's it. So I would be deploying all the USDC that I have, which is currently 10. I will be putting all the liquidity here. You can see the liquidity spread out on this, and I can also change this, change it the upside to the downside, or change it from here, from below, whatever I want. You always have the options to play with this. So I deploy all my USDC here, and as the price of Solana keeps on falling lower, I will swap my USDC into Solana, and this is how I basically enter a position. Okay, so here let's for now put autofill and split our position into half half. So let's say this is how I want to deploy my liquidity. Another thing that I would like to highlight with specifically with Meteora is that you have different strategies. You have a spot strategy, curve strategy, and bid and ask. What is the difference? When you choose spot strategy and you click on autofill, your liquidity is spread evenly across all the bin steps. You can clearly see they are all equal. Now, if I switch to curve, my liquidity, the most of the tokens will be deployed very near to the current market price, and little liquidity will be split amongst, or will be split far off the current market price. And then the final strategy is bid and ask, whereby you have very little liquidity in the middle, and then the biggest tokens or the biggest liquidity is spread across the both edges of my full range. So here you have, I will have most of the liquidity here and here, very little liquidity here. This strategy, I will have most of my liquidity here, very little liquidity on the edges, and then the spot, it will be spread out equally amongst all that price range. The idea here is that if you expect the price, let's say I expect the price of Solana to stay to consolidate in this price range, the best thing I can do is to place my liquidity using spot. So because it will fluctuate in this range, I will catch the whole range. If I expect the range to be much more concentrated, then it's better for me to choose curve. So this way, usually you use this kind of liquidity for stable assets. And if I expect that the token will have a lot of volatility but stay within a specific range, then it's better to go for the bid and ask, because as the price keeps on moving to the edges of the liquidity range that I chose, then I will be making more and more fees, because most of my tokens will be at the edges. Then when the price reaches those edges, I will be making the most fees instead of making the fees in the middle. So this is the difference between the three strategies. Let's move on with our example. So I'm gonna reduce my liquidity to this range just for the sake of this example. Okay, so I have my liquidity split between Solana and USDC. I'm gonna go with the spot because the range is very thin. So I'm not gonna be using bid and ask. Everything looks fine. So I create my position. This is what I'm gonna be deploying. Confirm. And here you go. Right now, I have my position deployed. So my tokens are already inside of the pool and earning fees at the moment. So this is the dashboard where you can see it all live. Right now, the liquidity range that I am in is 91.42 to 92.11 for every Solana. What you see here is the live price moving. And this is the fees, by the way, that I'm accumulating. So as the price started moving inside of these bins where I deployed my liquidity, it's either I'm selling Solana for USDC or I'm selling USDC for Solana. Either or. So as the price moves lower, it means that I am swapping my USDC into Solana. And as the price moves higher, it means I'm switching my Solana into USDC. I'm exiting my position. So from the trader's side, if you want, when they swap into that pool, they are effectively taking my Solana, meaning they are swapping from USDC into Solana. But when they do so, they are taking the Solana that I have provided in the liquidity pool. And the opposite is true. So you can clearly see what's happening here. It's pretty straightforward. The price is moving, and as the price moves, it's just using my tokens as liquidity, and as it's doing so, I am starting to accrue fees. At some point when the fees are big enough, I can basically claim all the fees and exit my position or keep my position and just claim the fees as well. Now, what happens if the price goes outside of your price range? If it goes outside of your price range, then your liquidity stops accruing fees. You just have liquidity sitting there idle, not doing anything. I will give it some time to see if the price will jump outside of the price range or outside of the liquidity zone that I have deployed all my tokens in. So I can just show you the example. So while we wait for the price to go outside of the range, I'm going to move my cursor into the specific bin to show you exactly what's happening. So the price is falling at the moment, and you can see that in this bin, I have 0.00005 Solana and some 0.82 USDC. So as the price keeps moving lower, it will basically take all of my USDC and end up with Solana. As you saw right now, I no longer had USDC, or I no longer have USDC in this bin. I only have Solana. So I switched my USDC into Solana. The same for this example here. This is another bin. You can clearly see that right now in this bin there is only USDC. The price keeps on moving lower. So here you go. You're seeing how all my USDC right now have been switched completely into Solana. So it's like I entered a Solana position by deploying my liquidity in this price range. So also right now, actually, let me click on this to show you. So right now, in my liquidity is mainly Solana. I have right now 0.164 Solana, and I no longer have any USDC inside of my position because price is reaching the bottom of this of the liquidity that I deployed, and you can clearly see that it replaced all my USDC with Solana, basically. So this is the dangers of doing this without a purpose. If you just entered a liquidity position, you deployed your cash because you deployed your assets because you just want to make fees, you might end up with one token that you don't want. So it's very important to understand what you're doing. And right now the price is outside of our range. So we can see here it's out of range. All of my tokens are right now in Solana. So I completely exited my USDC position, or basically I entered a Solana position. I entered the pool with 50% Solana, 50% USDC. Right now, the price is below my price range. So by doing this, what I just did is I accrued some fees, but they are basically nothing. It's just fraction. What you do is you basically to finish all of this, you claim the fees, confirm, and then After that, you can close your position. When you close your position, you're effectively taking back all the liquidity that you have deployed. But as you know, I deployed half Solana, half USDC. Right now, I'm going to be removing only Solana because the price went at the bottom of my price range, and I switched all my USDC into Solana, and I only ended up with Solana. So I'm withdrawing all my Sol, and the liquidity is right now removed. If I open my wallet, I can, right, you can clearly see here that I have all my Solana back into my wallet, and I no longer have the USDC, which I basically deployed. So this is basically how you deploy liquidity into decentralized finance and specifically on Meteora.